Karen Weaver with 810 News Media Group and Black Money Matters. We're reaching out to you today to ask for your help with our summer membership campaign. Our theme is amplifying our voice. Our voice is our collective voice, and you, our viewers, can help us to do this every time you like, share, and subscribe to 810 News Media Group. Our goal is to bring the news that is important to our lives in an unbiased, untarnished way. As a subscriber, we know you believe in the importance of our work. If you and everyone else hearing this gave us $5 today, our voices can be amplified even more. Will you show us your support and contribute to the cause? Cash App us at $810 News Media Group. Thank you.
On. We are on. Jameca?
I'm here.
Okay, how you doing today?
Good.
Thank you all for tuning in to Black Money Matters. I'm Karen Weaver.
And I am Jameca Patrick.
And we have been waiting for today's show. We have been waiting for this. I'm so excited, Jameca.
I am too. I think today is going to be important for a lot of people in business and personally.
Oh, you all share this too.
Business a lot, but today is going to be important.
Well, we're talking about economics. Mm-hmm. And you know what? We have with us on the record with Bill Cobb. He's here with us today. Thank you for joining us. Appreciate it, Bill.
It is my pleasure. Good afternoon.
Look, and do you hear something in his voice that sounds extra excited, extra happy? You hear it? You hear it?
He's excited to have this conversation as well.
No, that's not it. See, I haven't talked to you. So, Sunday was Father's Day.
Yes.
He's a grandfather. We had an addition to the Weaver clan, but he is Cobb's. Billy is our nephew, William and Lisa's son. And what'd you have?
Yes,
What'd you have, William?
We have a 8-pound 1 ounce William C. Cobb's the fifth.
The fifth. Oh, wow. The fifth. That was the Happy Father's Day.
He's the fifth. Yeah.
Something.
So the journey begins.
He's your first? Is he your first?
And the thing that we're going to talk about this afternoon is something I'm going to start teaching him early, so that he stays out of trouble.
You know what? Now, we're laughing, but this is serious.
It is.
And I think that's why I'm so excited. You all share this, please, because this is an important conversation. And this is one we tried to have.
We did.
A while back.
I want to do a mic check. Can you hear me, Mr. Cobb?
The volume needs to come up some.
Okay.
For both of us?
For both of you. You're both really low.
You turn our mics up.
Mickey's in here. He's playing us because he's angry with us, I think. That's what I think.
Can you hear us now?
I can hear you.
Okay.
Yeah. Well, okay. I went back to look because this was in March. This was back in March, Jameca, that he was talking about credit cards and really talking about economic bondage. And I wanted to be part of that conversation. I can't remember where you were, and I tried to get on. I tried to get on, and I couldn't. But I listened, and I went back. I went back and listened again, William, just because it was really interesting the way things were framed up, because you were talking about, he said, a lesson for my people. I don't know if you remember that, but you said a lesson.
I do.
About economic bondage and how do we break it. That's what you were talking about.
Right.
I'm listening, Jameca, I was writing it down because I always do that. Because you talked about a system that squeezes the life out of us. And you talked about credit cards and banks that keep us, and how they keep us in economic bondage. And Go ahead.
You know, one thing I'd like to encourage folks to do right now
What?
is if you've got a credit card bill, a recent credit card bill, you know, I want you to go get it, because I want you to look at it as we're having this discussion so you understand exactly what I'm talking about.
Okay.
And I did that. When you said that, I said, "Oh, let me go get my statement." So I did do that, and I saw what you were talking about. And it was also interesting to me because you talked about the history of credit cards and how they were there to supposedly increase consumer convenience, but how they actually have us spending beyond our means.
They sure do.
And how
Absolutely.
we get in trouble about that, and we think it's convenient. And sometimes, you know, it is convenient. Sometimes things come up,
It feels
but
convenient when you can just swipe a card,
right.
and I'll pay back later, and you don't really think about how much it really costs and what it does to your month-to-month finances and stuff.
But when you look at that statement, you get some interesting information. But go ahead. Let's get started on this, because
You know what really got this thing started is I had a young man who I was having a discussion with, and he's 26 years old. He was going on vacation, and he was going to finance his vacation with his credit card. So he was going to go spend 2 weeks down in the Dominican Republic, and the total cost for this vacation was going to be around $8,000, and he was going to put it on a credit card.
Oh, wow.
And and when he said that, I kind of was shocked, because, you know, I don't think, well, I know he didn't understand the ramifications of doing that. You know, he was going to put $8,000 on his credit card for a 2-week trip, which 6 months from now, he would have nothing to show for that $8,000 other than a bill. And here's the thing, you know, most credit cards today are issued with adjustable finance rates. Very few credit cards today have fixed rates. And what that means is that for purchases that you made last year, if you have an adjustable rate card, you're paying more in interest this year than you did last year, because of the way the Fed has increased the rate every single month for the last 12 months, except for June. They didn't increase in June, but every single month the Fed has raised rates. And if you have an adjustable rate credit card, your interest rate has gone up every single month. Now, the thing I want you to look at is that if you look at the statement that's in front of you in very, very small print, it tells you what you will pay for that card if you only pay the minimum payment,
and how long it will take you.
And how long it will take you.
Yes.
So I'm looking at somebody's statement right now. They've got a credit card balance of $15,000. And if they only pay the minimum, which is $150 a month, they will be paying for the next 19 years.
Wow.
Right. And how much?
And they would have paid at the end of that 19 years for a $15,000 bill.
Right.
They would have paid $43,196.
Isn't that crazy? And that's what we need to look at. And that's why, like you said, I'm gonna start teaching William now, little William, Billy, whatever we're calling him. I'm gonna start.
First rule. The first rule about buying things with a credit card is when you go do it, you got to think. You got to be thinking about, is there a way that I can afford to pay for this in 12 months? You know, and you'll understand why I'm saying 12 months as we go along. The whole idea is that you should never be putting something on your credit card that's going to be there for more than 12 months. So lock that in, and I'll explain to you why.
I'm taking notes.
Say that you should never do what? Put something on there that's going to be there how long?
That you're going to have for more than 12 months.
Okay.
So even if they're telling you your monthly payment on this new refrigerator that you bought, you know, is $36 or $45 or whatever number they give you, your goal should be to pay for that thing in 12 months.
Right.
To avoid paying for it multiple times because of the interest rate.
Refrigerators.
Right.
You know.
Because of the interest rate, you know. And that's a tough one for people because, you know, all of us strive for immediate gratification.
Right.
Without recognizing that every time we use that card, we're creating a trap that can keep us locked in to owing somebody for forever. See, the bank only wants you. The bank doesn't want you to pay more than your minimum payment.
No,
you know, they want you to. They want you to fall into the habit of paying the monthly minimum because for them it's a revenue generator.
So
you know,
this, William, I have a question because I'm looking at my statement, right? So it tells you if I pay how much more? Let's see. The minimum is $52 more. Instead of it taking 15 years, it would take 3.
Right. Exactly. And now think about it. Now just think about that for a second.
More than the minimum. I would take off 12 years of that payment.
12 years.
Yes.
And why would you give somebody 12 years of your money if you don't have to?
Right.
Because you're literally giving them your money and you're getting nothing back in return for it. Nothing. You know, and here's the thing. You know, the credit card companies want you to use their cards because every time you use the cards, they have a little bit tighter lock on you. But you can use their game against them. And we're going to talk about how you use the credit card company's game against them.
But you also said, well, here's what they do too. You said this too, and it's so true that they create the need. So if you want to rent a car, have to have a credit card.
When you got to have a credit card.
You know, you have to have a credit card. So they create a need whereby the point to get you in that economic bondage.
Right. We're telling
if you want to check into a hotel, you got to have a credit card.
Credit card. And yeah, that's a whole another thing.
But you can beat them. You can beat them. And here's the thing. You know, it's important that each of us understand what our credit record looks like. So I tell folks every day that there are free credit reporting services like Credit Karma and any number of others that you can sign up for that you can literally go out and check your credit every single day to see where you are on your revolving bills. And it's a good idea to do that because it helps you to understand how effective your payments are being. The other thing I encourage people to do is that even though you only get a statement once a month, if you take that payment amount that you're going to pay and split it in two, and you pay one, let's say you get 2 pay periods a month, and you pay half of it out of your first check and half out of your second check, that will help you to drive up your credit score because your credit score will then reflect the fact that not only do you pay your bills, but you pay more than you have to, and you do it on time. You know, I don't know how many times I've talked to people and they talk about the fact that they got a $35 charge for a late payment because they forgot it and paid it a day late.
Right.
Well, you know, that's another way the banks and credit card companies make money. You know, they want you to be late because every time you're late, that's $35. And also they get to ding your credit history because the credit reporting agencies keep track of how many missed payments or late payments you have. And every single late or missed payment that you have affects your credit rating. You know, so let's say you have a credit card bill that's $3,000 and you are paying $100 a month for it. The first thing I would tell that person is you got to change your habits. Instead of paying that $100 minimum, you got to pay $130 a month. Split it into 2 payments, $65 each. And you will see within 6 months a positive impact on your credit rating, and the goal for everybody is to get that credit rating in the green area, which is good, so that, when it comes time to buy a house or to finance a car, you get the best possible interest rate out there, because they don't charge everybody the same interest rate. The rate you get charged on a credit card or a car loan or home mortgage is depending on your credit score. And if your credit score is low, you're going to pay more than the person who lives next door to you, who's paying X amount, because they've got a better credit score than you. So you got to learn to work the system. The other thing that people don't pay attention to is that every single month, if you've got decent credit, you're getting, offers in the mail for a new credit card,
Right.
and they're offering you that new credit card at 0 interest for a year. Now, remember, I told you should never buy anything that you can't pay off in 12 months. Right. This is where this comes in. So you've got, let's say you got a Citi card or you got a Discover card that you got an outstanding balance on, and you're paying 23% interest on that card.
Mm-hmm.
You always go for those no interest offers for 12 months so that you can pay down.
Right now, William, Discover.
I'm sorry?
I was going to tell you who has a good deal going right now. Discover has one where it's a year and a half. You have 18 months.
Right. So you use that to pay down that debt that you had with somebody else.
Right.
And all of that interest that you would have paid to somebody else goes to the principal on that new card. So you're bringing it down faster. I have not paid interest on a credit card in years because I take every 12-month offer I can get and pay them off. The other thing I'm going to tell your audience is that if you are a prior Navy veteran or one of the other military services, join the Navy Federal Credit Union, because NFCU has some of the best rates out there. And they have credit cards that will allow you to have a high enough limit so that you can really leverage consolidating all your cards into one card.
Mm-hmm. And these are the things we need to be looking at and letting people know about, because this gets you in trouble.
It does.
It's been a system that's set up to work against us really from the very beginning.
The way the banks see people assume that everybody gets treated the same. And nothing could be further from the truth. If you're Black or you live in a zip code that is predominantly Black, they know that. And when they send out these offers, everybody will get a different interest rate. You want to make sure that you aren't being literally enslaved financially, because you're always getting the highest interest rate that they have.
You said enslaved financially. Okay. Jameca, I've been reading this book, The Color of Money, Black Banks and the Racial Wealth Gap. I got this at Cobb bookstore. You all go get it. But one of the things it said there was how physical bondage was replaced by debt bondage, and keeping us in economical, bondage, or economically enslaved to a system that was designed to do just what it's doing.
Yeah. So, in America, here's a quick fact for you that you can investigate for yourself. In America, Black folks on average pay anywhere from 5 to 6% more in credit card interest than their white counterparts. 5 to 6% more. In terms of financing a house, they end up paying up to 2% more to finance the same house.
Mm-hmm.
And that's because we are unfortunately not as financially literate as we need to be and understand how the game works. You know, you have got to understand how the game works. You know, one of the ways we fall into this trap is, I'm gonna move away from credit cards for a second, but I'm gonna come back because I gotta say this while I'm thinking about it. Is that you know, when we shop for insurance, particularly things like life insurance, we make the mistake of falling into the trap of going for something because it's low price. Now, you know, there are two kinds of life insurance. There are whole life policies, and then there are term life policies. Everybody understand what the difference is between the two?
Tell us, in case somebody
So
no.
term life insurance is a policy that the insurance company issues that is year by year by year, meaning that they give you a rate for this year and you pay that rate for the year, and then they can choose to not renew it for additional years for any reason they choose to. You know, whole life policies, you actually have a contract with the insurance company that says that over the next X number of years, you're going to pay into it and you own it. That means that if you decide in year 10 that you want to cash it in early, you have a cash value. You get the money that you've invested in that policy back. In a term life policy, you know, you're basically renting the insurance. You don't own anything. You are just paying to be covered for a period of time. When that period of time expires, you don't have anything. You don't have the ability to say, I want to cash this in. You know,
It's like,
and people buy term policies because they're cheap. But in the long term, they don't provide you with the same level of security you get out of a whole
well,
life insurance
you know
policy.
what? You think about it, when insurance was set up, they didn't want to insure us anyway.
Right.
Because they said,
Right.
our life expectancy was too short, and it was because of our genetic makeup instead of everything we were dealing with and living through. So they set it up from the very beginning because they said we weren't worth the, the investment or the protection. When you talk about insurance, and I can't remember what company this was, but it was the largest first black insurance company, might have been in North Carolina or someplace. And just how they started insuring black
That
people.
it makes me think about during COVID when we were having that conversation around, and I remember you saying being black is a pre-existing condition.
They asked me, right? When they were asking me about pre-existing conditions about COVID, I said I'm black and I'm from Flint. Now, what else do you need? If being black isn't a pre-existing condition, come on.
We we just have to get in the habit of paying more attention, before we sign on the dotted line. You know, because sometimes we're in such a hurry to get credit that we don't understand the terms we're getting it on, and it gets us in trouble.
The percentage
we're
of
like, oh
interest
wow,
we have
they're
to
going to
pay.
give me this card, and I can swipe it and go out and live my best life. I have a question. Oh, North Carolina Mutual Insurance.
Right, I was reading about that.
Was the insurance company.
We could not get insured. But that's been across the board on so many things. We can talk about insurance. We can talk about housing loans, medical services,
business
all
loans,
kind of things,
all of that
we can't get.
all of that.
Well, black businesses have a horrible time getting small business loans.
Right.
I have a question, Mr. Cobb, and this is based on a conversation that I was having with someone actually last week. And they were talking about, wanting to clean up their credit, and that they had engaged or spoke with someone who said, pay me this amount of money and I'll fix your credit. And I said to them, what are they going to do to fix your credit? And why are you spending that money with them and not creating a plan and using that money to clean up your own credit. And so my question is, for those who already find themselves in credit card debt, they're only able to pay the minimum payment, or they don't have a lot of extra to pay toward these bills that they created at some point in their life, and they were trying to, get their credit together. What would you tell them? What advice? What would
So what you're referring to are the credit repair services, and the credit repair services to me are preying on people's desperation, because you can't fix what can't be fixed.
Right.
But what you can do is you can do exactly what they do. When you engage with a credit repair service, what they do is they contact your creditor and make a settlement agreement. You could do that yourself. You don't need to pay somebody to do that. But the one thing that I think it's important for people to get out of this discussion today is that if you find yourself in a position where a credit card company is coming after you and they're threatening to sue you, or they already have sued you, do not ignore it. Do not ignore it. There are ways to turn things around on them. Credit collection agencies, which is normally what the banks use, when they buy a debt, and that's what they do, they buy the debt from the bank for pennies on a dollar, and then they come and strong arm people. And, usually they send you a letter saying you owe X amount to XYZ Bank. We are now collecting on that debt. You have X amount of time to respond. People panic and they don't do anything, which is what they want you to do. They want you to panic and they want you to ignore it so they can file a suit against you.
Away.
And if you don't respond to that suit in 21 days, then they take a default judgment. If you get sued by a collection agency or by a credit card company or a bank or anything like that, you must respond to that paperwork within 21 days. If you don't respond in 21 days, they can go to the court, make a motion for a default judgment, and they will automatically win because you didn't respond. However, what you can do is if a collection agency approaches you and says that you owe them XYZ and they want to collect on it, you immediately write them a letter and say, I would like for you to provide for me proof of debt.
Proof of debt. Proof of
debt that I actually owe you XYZ money. The reason you're asking for this is that normally when collection companies come after you, they bought the debt from somebody else, but they don't have any underlying supporting documentation.
So they can't prove that you owe the debt.
Right.
So then
if you ask for proof of debt and they can't provide it, then you can literally tell them to go pound sand.
Right.
Go
pick rocks
with no socks.
If you can't prove that I owe you, then don't call my house anymore. And here's the thing that people don't understand. If you have asked a creditor for proof of debt and they can't provide it, but they keep calling you, that is harassment.
I was going to say, isn't that harassment?
That is harassment. And once they continue to call you after you have said not to call, you can turn things around on them and sue them and collect.
Oh, wow.
So, but people don't know this.
No, and if
they don't know this, they don't understand. They don't know their rights. So they cave in. You never begin to pay somebody who's collecting on a debt without proof of debt.
Okay.
And
get proof of debt, please.
But you have to ask for it in writing. So when they call, you get their information, and then you send them a written letter asking for proof of debt. I normally tell people that when you ask for that proof of debt letter, you do it by certified or registered mail, so they can't say they didn't get your request.
So there's a question, because someone says, okay, what if they can prove it? Then what?
Okay. So if they can prove it, remember, they bought the debt for pennies on the dollar. If it's a $7,000 debt from a bank, they may have paid $300 or $400 for it.
Oh, shoot.
And what they're trying to do is squeeze as much money out of the debt of the debtor as they can. And if they tell you that you owe $7,000, they'll settle for it significantly less, because if they only get $1,000, they still made money. They still made money. So if they call you and say, we have proof of debt, you owe this much, the first thing you should say is, I don't have it, but I'm willing to work out a settlement agreement with you. And they say you owe $7,000, tell them that you will pay them $1,500 over a specific period of time. 9 times out of 10, they're going to say yes, because something is better than nothing.
So
something is better than nothing.
And but you make me think about this. Who they seem to prey on are like college age. As soon as you get old enough to go to school,
here credit card. You don't even have to have a job.
Nothing.
Well, they're so excited to have a credit card, they don't think about how they're going to pay it. They're just excited to have it. So they're easy prey. That's why they hang out on college campuses, offering kids cards. It's easy to get them in the trap early.
And that's what it is. It's a trap, and then it becomes a cycle, because you're just in debt forever.
Here's something else that your listeners need to understand. If you're paying your bills on time and you've got a consistent history of paying them on time, you should be calling your bank at least once every 12 months requesting that they lower your interest rate.
Okay.
They can do it anytime they want. Just because they tell you the interest rate is 20%, that doesn't mean that you got to pay 20%. If you have been a long-standing customer and you have consistently paid your bill, you should be asking them to lower your interest rate every 12 months. You should be asking for a better rate. The only thing that they can say is no.
And you're no worse off then.
Right. And you're no worse off than you began with. And if they say no, then you just know that you need to look for a better banking relationship.
Exactly. But you know what else I've seen is, if you have a good history of paying and you're late, if you call them and have a conversation,
they will waive it.
There you go.
They will waive it. Yeah. If you miss making your payment on time by a day, 2 days, you can call them and ask them to waive it.
Right.
And
they won't keep doing that.
Generally, if you've only done it 1 or 2 times, they won't give you a hard time about waiving that $35 late fee.
It's the 3 strikes.
And it makes a difference, because that $35 should be yours to spend, not theirs to spend.
Wow.
You can use that $35 to pay that debt down a little bit.
Exactly. That could be the extra money you put on there.
Yeah.
The extra money that you put on there. So and that's what we need to look at, and that's what we need to educate people about, because it's like you get this credit card and you don't know how to be. I mean, you have to have knowledge and discipline, really.
Now, one thing that people should know is you should avoid having your cards at the limit, meaning never charge up to your limit on your credit card. You should be keeping your credit cards at the in a range that are 30% or below of your limit. So let's say you got a $5,000 limit. Try not to ever get above owing $1,500 or more at one time, because once you get above 30%, they start to they start to impact your credit rating. So even though they've given you a limit of $10,000, if you spent more than $3,000 of it, then they're going to start to view you as a bad credit risk, because they're going to assume that you're spending more money than you can afford to spend.
Okay, well, I'm looking in here now. Philip is talking about the apply for the lifelong learning credit in your taxes also.
Oh, when you file your taxes, if you're a student, if you're a student or you have a student, you can that's one of the tax credits that helps you get more. It reduces your tax bill at the end of the year.
Okay.
And you can probably get a return on some of the taxes.
Thank you for putting that in there.
If you have a long-term banking relationship with Chase or one of those banks like Comerica or Fifth Third, all of those banks have private banking services. You should be asking the manager at your bank whether or not you qualify to be a private banking customer. And the reason is that if you're a private banking customer, you usually get better rates on loans, you get more free services, and a more personal review of your request. Say, for example, you were applying for a mortgage and you were a private banking customer, they can get that approved much quicker than they can for a regular customer.
So you just go in, and when you have to sit down and talk, that's what you ask them for.
Yeah. Do you have a private banking service?
Okay.
And what would I qualify for it? And can we start to work on that so that you get the best out of your banking relationship?
See, I didn't know that. I didn't know about that. So I'm glad to know.
Me too.
I'm glad to know that.
Well, we don't get to take advantage of all the services that white folks do, because nobody tells us about it.
No,
nobody tells us, and so we just think that what we see is what there is.
But it's just and that's how that wealth gap stays in place. I mean, because of these kinds of systems. And
well, that is absolutely part of the wealth gap. Just like people don't recognize that, we talk about this all the time. We talk about the wealth gap, and people don't recognize the fact that if I'm looking at Nancy's comment, you can't ask, but you usually have to have quite a bit of money. Well, let's say you have a business and you're doing business banking with somebody. All of that rolls into what resources you have. So, they're going to look at the total pool of resources you have as they decide to whether or not you're going to qualify as a private banking client.
Okay, so they'll take a lot of things into consideration. Unless they're trying to keep you out on purpose. William must be reading.
Yeah, I'm reading. I'm reading
the comment.
Phil's comment. All too often, we fail to use our negotiating power. Sometimes you have to tell somebody, okay, well, if I can't get it here,
I'll get it.
I'm going to shop around to take my business somewhere else. And sometimes that's all it takes. Because I had a recent experience with T-Mobile. I've been a client of Sprint for 25 years, and T-Mobile and Sprint are the same company now. And T-Mobile was giving me a hard time about something. I said, okay, now I've been with you consistently for 25 years. And over 25 years, I paid you enough to buy a house for somebody.
Right.
Now, if you want to see me walk away, that's on you. But I'm giving you an opportunity to not have to have that discussion. and that's the way you have to deal with these financial institutions to get everything that you should be getting out of them. This shouldn't be a one-way street.
Right.
I think it's funny though, and I know that's sort of a sidebar, is that I was with Nextel and then Sprint bought, they purchased Nextel and then T-Mobile purchased Sprint or whatever. And so recently I had a similar conversation with T-Mobile. I said, check your records and see how long I've been loyal to you. I can take my business and I'm paying more than average already for my service. I can take that and cut my bill in half with somebody else. And they got their act right together.
Yeah.
You have to let them know
and let them know you understand your purchasing power.
Right. That's right. All too often we don't do that, and because we don't do it, we get put between the wall and the hard place, and that doesn't have to be the way that we get dealt with. We have got to become financially literate and understand that negotiations are things that go more than one way.
Right. And that's with everything. That's with jobs. That's with interest rates. That's with everything. Whatever you bring to the table initially, I need to advocate for myself and know what I can and can't accept. If I'm applying for a credit card or I get a credit card offer, am I willing to accept that interest rate?
Well, I'm looking at Flint right now, and I look at all of the land that is around the city of Flint today. And, I'm wondering why that person sitting down in City Hall isn't doing something to make sure that there is an effort being made to develop low cost and moderate single family housing. If you want your city to grow,
you need houses.
You need families
who live there. Right.
And families don't want to live in apartments.
Exactly.
Yeah.
Rather than throwing every penny you got into downtown or some other chosen area, you should be finding an area that you want to redevelop and make it a neighborhood, a community that people want to be in and are proud of and are looking to make their home.
North Flint, there are neighborhoods that I remember that there's a neighborhood in particular in the first ward that my cousins lived in, and I used to love going over there and playing and stuff when we were growing up. And you go there now, there's like one house on the whole block, two houses on the whole block. And I'm looking and I'm like, why aren't we building single family homes in this area? And like you say, feed our school system. And where I live, I want to work. Where I work, I want to play. It's like a cycle, but we're not taking advantage of it.
But what you made me think of, William, something else I've noticed when you look at all of the schools that are around and empty. I was just at my niece's birthday party, and it was at a school down your way. It's a high school. It's a former high school now.
The Hawk Center.
Yes. And they have converted this into, it's like a small kind of event center. So there was a birthday party going on. There was something going on in the theater. At another end, there was another birthday party going on. They had something going on as far as some athletics in the back, but they were renting this space out and making it a destination spot really for different activities that families and organizations want. And that keeps it maintained.
Exactly. I mean, here's the thing that people have to understand. In the next 10 to 15 years, you're going to see Michigan grow at a rate that it's never grown at before. Cities like Flint, like Detroit, like Highland Park will have an opportunity to really be revitalized, to really bring back neighborhoods that will really have the growth in population that justifies rebuilding schools that are no longer there or being used.
Right.
But you got to have a plan for it. You've got to be working towards that. You can't just be working to make Mr. Charlie happy.
Right.
And unfortunately, there are far too many black politicians who don't understand that their job is to do what's right for the people, not what's right for people who they're looking for something from.
And it's if I'm okay, I'm okay. What did you say? What does that comment say,
Yeah,
Mickey? We have a comment in there.
Go ahead, Mickey. Go ahead.
Yeah.
What is that? Because I think that's aligning. It's hitting the head on the nail on the head.
But John Malley, who let that happen?
Right.
Who let that happen? The people of Flint have got to take back their city and make sure that they're only looking at people who really want to lead and not people who want to be show horses.
That's exactly right, because we've got some opportunities. And, it's funny because we started all of this talking about credit cards and economic bondage. But when you have those kinds of things, it keeps you from having that purchasing power to get a home, to get a loan.
But Karen, even more so than that, here's the thing. If you don't have a city that understands that in order for people to get a chance to begin to build some kind of wealth, you've got to have affordable housing that they can get into and start with, then you never break the cycle. Because if somebody spends 30 years renting from somebody else,
right,
because there are no affordable houses for them to buy and put their families in, then when they die, there's nothing for them to pass on. Because they've spent 30 years paying for somebody else's property rather than their own.
And that's why home ownership is so important when we talk about, these issues. And that's something that we want people to have. What was the name of that program, Jameca, from last week?
NACA. Some people call it NACA. Some people call it NACA. It's pronounced NAC. I mean, it's spelled NACA. And it's a home ownership program that doesn't look at income. Like, I think you have to have some income, but you don't have to have like a lot of income. And they help you through the process. They don't just pull your credit and say yay or nay. They help you. They have like a non-traditional way of helping people, not based solely on credit scores. Like proof of, like, for instance, people who've been renting and they know that they can pay rent, they like consider those kind of factors. And I'm not a subject matter expert in NACA, but I had engaged them to try to bring them to have some conversations or a workshop in Flint many years ago. And so I learned a little bit. I learned enough about their program to know that it's helpful for people who are lower income. And I do know because of social media and during that time I joined one of their Facebook groups that they have an active program in like Detroit and things like that. And our guest last week was telling us that they're also in Flint.
And so we have an obligation. I feel like it's an obligation. I mean, I think we need to be educating our people and people around these kinds of issues, because you said it when you were talking about it the last time, when you were talking about the economic bondage, and really that's what it is. That's what it is. I mean,
it's just a new kind of slavery. That's all.
So what I thought about when slavery was over, and then you had sharecroppers, and they paid for the land, they paid for the supplies, they paid for the tools, and they used credit, and they paid.
You never got out of debt.
Right, paid their debts with their crops, and never, there wasn't very much left over. And
it was a different version of slavery. Exactly. And what we've got to do is recognize that there are opportunities to break the cycle, but until we have gone through the process of educating our folks and helping them to understand the traps that they fall into, you can't break that cycle. Because right now, there are young people out here who buy cars and pay crazy interest rates. Because they don't know any better. Somebody said, "This is how much you pay," and they say, "Okay, I'm glad to have this car, so I'm gonna sign on the dotted line."
Right.
And they're paying 13 to 17% interest on a car.
And the car was 10 years old when they bought it.
Yeah, it's crazy. We have got to break the cycle.
Right.
And the reason I'm glad that we're doing this program today is this is the beginning, but it certainly won't be the end, because there's great work to be done, and we got to just consistently be delivering the message and making sure that people are hearing it. So I would say that for anybody watching this show today, the most important thing you can do for the people in your community, in your life, in your circle, is to make sure you share what this show was about. And if it's available to review, that you point them in a direction to get to it so they can see it. And then they can take out their own bills and look at them and say, here's how I make a difference in this. Because right now, this hole is getting deeper and I'm not getting anywhere close to getting out of it.
Right. And they want us to stay in that hole.
Share.
Yeah, we want you to share this information.
We want you to like, share. We want you to subscribe to our YouTube channel. We want you to share, do all of those things. We're also going to rerun it. Mickey, when are we going to rerun it? Pardon me?
We're going to
rerun it again tomorrow. You'll see it.
I was thinking, because this wealth gap is just where it's been historic injustices that just keep this present suffering going on and on and on and on.
And now my credit score is so low and I'm paying so much that I can't afford to buy a house for my growing family. So now I got to keep paying you rent so that I can have a big enough house. And it's like a vicious cycle. And we need
it is. See, here's the thing. You don't have to use credit just because you got it. And the goal is to make sure that when somebody pulls your credit score, is they can't use it against you. And if you got a bad one today, it may take you some time to get it up, but you can get it up. You just got to work at it.
Exactly.
And I think that's real. I'm happy you said that, because I think a lot of times people, they may go on Credit Karma or something else, some other site, and they pull their credit and they say, oh man, my credit is low. And then, apathy sets in and they're like, oh, well, I got bad credit.
Right.
But you can dig yourself out of bad credit.
Yeah, you can fix that.
You can
if somebody today has a credit score, let's say they got a horrible credit score, like 450. If they develop a strategy and stay with that strategy for 12 to 18 months, they can bring that score up to 600 within 18 months.
See, and that's what people need to hear.
On the road to purchasing a house, purchasing
and if you had a 450 credit score a year and a half ago, but you brought that up to 600, the bank's going to look at that and say they figured it out. They now know how to manage their money. So I can take a risk on them because they're moving in the right direction.
Right. And that's what we want people to be able to do. I mean, because we started Black Money Matters. We were just talking about how economics is tied to everything. It's tied to a lot of times the quality of education you get, the
overall quality
of life, your access to certain kinds
resources,
of health
care, food,
all of
those
things.
Food insecurities that you're not dealing with.
It's also tied to your ability to get the job you want.
Exactly. That's right.
If you want to work, like say some young person wants to work in a financial services business, well, one of the things that they do before they'll hire you is they check your credit score. They want to know whether you as an individual are financially responsible before they let you start to tell somebody else or work with somebody else about their money. So you have got to recognize that everything you do in terms of your finances, somebody else can look at and they can make a decision about aspects of your life that John Malley, you were absolutely right. They don't want people to know this kind of information, and they understand that credit cards are a Ponzi scheme designed to enslave people.
Right.
You're right.
And
I won't argue with you.
Enslaved us, and it's bad because we've had, it's been separate and unequal. When you talk about what we have, the banking and credit.
They use credit to
It's been separate and unequal when you look at the banking system and the credit system and us having access and information to what, you know, what our white counterparts have. We don't get it. We do not have it, and that's why we're here. I mean, we want to bring this kind of information.
This is
well,
great.
there's more than a little bit of stuff to talk about.
We're going to be talking,
and you know, when you guys want to do this again,
right,
and deal with another area of finance, we can do that, because I am dedicated to making sure that we do whatever we need to do to enhance our communities. You know, we keep having a lot of conversations about the government not doing this and the government not doing that, but we as Black folks have got to recognize that if we don't do it for ourselves, it's not gonna happen.
Not gonna happen.
Absolutely.
And there are things we can do, and that's the kind of information that we want to share with everybody.
Right.
So I'm gonna say it again: you all share this information, and we are going to have other conversations around these issues, because I mean, somebody's got to bring the information. Somebody's got to bring this kind of information.
Absolutely.
Yeah. So you know, you said something, but we've got a few minutes. What do you want people to take away? What do you want people to take away from from today's discussion?
So for me, one of the things that we're doing right now is we have started a community cooperative. You know, we have the Detroit New Day Community Cooperative, and cooperative finance is something that we as Black folks don't like to practice, but it is crucial to us gaining financial independence. You know, and cooperatives are really designed for people to come together, pool resources to make things happen. You know, in Africa, in places like Africa and India, you know, people who can't go to the bank and get help rely on cooperatives. And what the cooperatives do is they get their members to contribute X amount of money, and then they use that money for community objectives. One of the things that we're working on is trying to raise enough capital to build 400 affordable price housing in the city that people can use as starter homes.
Okay.
And begin to build an independence that they don't have today.
Right.
You know, one of the things that frustrates me is that if you look at Detroit, you have all kinds of apartments going up.
Right.
But those apartments are designed to make one person wealthy.
Exactly. And that's what happened. And you know, Flint is just a smaller version. The same.
And we've got to figure out a way to make sure that we are building communities that encourage people to work together to do better. You know, we spent a lot of time talking about, you know, all the places like Black Wall Street and stuff that aren't here anymore.
Right.
We need to build some more.
We need to build some more.
Why are we waiting? We can build some more. But in order to do that, we got to work together.
We've got to work together. That's absolutely right. And that's what needs to happen, because it was done before, it can be done again. And they think that, you know, we've gotten so discouraged and beaten down because of what happened that we won't do it. But no, we can come back. Absolutely. And these are the ways, and this is the kind of information that we're going to bring. I mean, and there are small things. I mean, you know, I gotta, we talk about supporting local and supporting Black. I do have on, I'm gonna have to give a shout out to Shantae Smith from Unleashed.
Well, you know,
support each other.
Look, I'm gonna tell y'all my realtor, Matika Fisher.
There is a Black food cooperative right now that is coming together in the city of Detroit. Because just like Flint, Detroit has food deserts.
Food deserts, exactly.
And there was no, you know, Kroger or any of the large grocery stores stepping up to join. So they built a cooperative, raised, you know, $1.5 million, and then got some grants for the rest. and they're building a new cooperative. So the Black folks who live in the community will have some place to go to buy their groceries.
We got to stop right there. We are running out of time. We're going to do a commercial.